there's probably some concerns around AI, some concerns around Nvidia. We obviously have the volatility around tariffs, right? Yes, of course. But I guess when I look now into the future, is that really, or is what we've seen, is that really the beginning of sort of a 10% correction in equities? I mean, to be honest, on the one hand, I kind of wish it was, because you'd be like, okay, there's finally a dip that we can buy, right? Because let's be honest, in the last 2 years, even last year with the carry trade unwind that we had, it was sort of over in 2-3 days.
Yeah.
So, like my fingers aren't quick enough to be writing buy the dip, and the dip is already gone. But the problem is, I guess the positioning is just simply not there. So even in the last couple of weeks, we've never really had in all of our data positioning that was super, super exuberant. So one thing that clearly it was not was exuberant positioning, which actually going forward is pretty encouraging. We look at some of the surveys yesterday, we've got the AAII, right? And it already is comfortably below the first percentile over the last, I think, 40 years or 45 years of history, which is crazy. We're, of course, the S&P is off its all-time high, but we're a handful percent of its all-time highs. High yield spreads have barely budged, IG spreads have barely budged, and sentiment is already so depressed, particularly on the surveys. That just tells me going forward, we're probably much closer to, again, buying the dip territory rather than having a full-blown correction.
So what is buying the dip territory? When you look at levels here, when would you be encouraging your clients to step in? When would you see the bottom?
Yeah, I mean, we haven't changed our stance. We're still sort of medium overweight equities, even in the US, also in the Eurozone, in EM, in China. But really most overweight in high yield credit, in emerging market credit, in emerging market rates. So it's really the carry assets, the high beta carry assets that we do like the most. Because let's be honest, what we're seeing right now is we are starting from a much higher level of yields. Spreads may be tight, but any kind of material weakening in spreads that we might see, or any kind of material spread widening, even like the last few days, that is then typically counteracted by a decline in yields. That's exactly what we've seen. If you look at total returns in high yield, whether that's euro high yield, dollar high yield, whether that's emerging market rates, whether it's emerging market credits, if you look at it the last 4 weeks, you'd have barely thought there's any volatility. You'd barely have thought there's volatility around rates, around Magnificent Seven, around DeepSeek, AI, Trump, tariffs. No, you'd be like, it's just a straight line upwards. And that, to me, at the moment is, I think, from an asset allocation perspective, by far the best thing that really I'm still staying bullish and the most bullish on right now.
Although Nvidia's fourth quarter results above Wall Street's forecasts, the company's first quarter gross margin outlook was below projections, which caused its stock to drop 8.5% on Thursday. Nvidia reported a first quarter gross margin of about 71%, which was less than its fourth quarter gross margin of 73%. The team is continuing to expand its Blackwell shipments higher and incur expedite fees to get systems to customers as quickly as possible, which is why JP Morgan analyst Harlan Sur pointed out that the gross margin projection was below consensus, 72.1%. Based on Bloomberg consensus figures, the chipmaker's $39.3 billion in revenue and $0.89 in profits per share above Wall Street's projections. Nvidia predicts that its first quarter revenue would reach $43 billion, plus or less 2%, which is higher than the $42.3 billion that Wall Street analysts had predicted. William Stein, an analyst at Truist Securities, wrote in a note late Wednesday that investors are yawning despite the earnings beat. In an interview with Yahoo Finance following Nvidia's earnings announcement, benchmark analyst Cody Acree said that the company's first quarter gross margin outlook was a little worrisome, pointing to increased competition and pricing pressure. "I think that's just the future that Nvidia has to live in," he said, adding that the key for Nvidia going forward is that demand for their products appears to be strong. In what CFO Colette Kress described as the fastest product ramp in our company's history, Nvidia's Blackwell AI GPUs, graphics processing units, contributed $11 billion to the company's Q4 revenue. Previously, Nvidia anticipated that Blackwell would generate several billions of dollars in sales during its fourth quarter. In a note to investors on Thursday, Stacy Rasgon, an analyst at Bernstein, although 71% gross margins may be a small point of contention, we won't disagree that, given the apparent lack of demand, getting stuff out the door should take precedence right now. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Nvidia's market cap slipping below $3 trillion. Fears over tariffs weighing on shares of the company, among other things. Nvidia has lost 10% of its value so far this year. It's still, though, the country's second most valuable company. Joining us for more on the chipmaker, Sasha Stojic, venture partner at Playground Global, a deep tech venture firm. Sasha spent nearly a decade heading up Nvidia's GPU software division. With a run that we've seen, I mean, historic. I can't even mention anything close to it, Sasha. I guess I could come up with something. But should we be surprised that at some point there's, a stock goes through a spell like this with nothing wrong with the fundamentals?
Yeah, I mean, you said it exactly right. Nothing wrong with the fundamentals. I'm sure you all listened to the earnings call, and it was really nothing but good news. The company is executing as well as it could. If there's anything I knew in my 10 years at NVIDIA, I know the team there. It's the world-class team that just delivered yet again 70+% growth in revenue. Yes, it's not 100+%, maybe like the previous quarters or years, but still mind-blowing. And, for a $3 trillion company, I just did the quick math in my head as I was listening to you. NVIDIA generates $100 million per employee. And that's just crazy. I mean, in market cap, in revenue, it's about 3.8 million. And the closest I could find is Apple at 2.3 million. So all these metrics are just incredible.
So we know that it in terms of the growth that we've seen, the multiple, while high, is probably not unreasonable. But how much air is there an air pocket? Is there a disconnect between the stock price and the underlying earnings per share? How much further could it go down? How much further could it go down, you think, Sasha? If people just said, I've made so much money, I'm going to get out.
Okay, I'm not a stock analyst, investment analyst, but what I can say is you can be a trader, you can be an owner in this stock. I am an owner in this stock, obviously. And any dips and spikes, especially short term, are based on sentiment and perception, not necessarily on fundamentals. Yes, there is profit taking. A lot of people made a lot of money in the past few years, so it makes sense to get out. But there is so much upside left. The AI renaissance is just at the beginning, and NVIDIA is the driving force behind that renaissance. And, we can go through the news and all the announcements about the data centers that are being built. And NVIDIA is by far the biggest benefactor, as well as all the other entrants into that space and vendors and suppliers that will spur the economy in that.
A January report from The Information claimed that overheating problems and glitches with its massive GB200 server racks with the Blackwell chips were causing customers to cut orders, raising concerns about additional delays ahead of NVIDIA's earnings report on Wednesday. This achievement of Blackwell revenue comes after design flaws reportedly caused production to be delayed by a quarter. However, those concerns were allayed when the business announced that Blackwell has fully ramped and that the demand for Blackwell is exceptional, according to CEO Jensen Huang. In light of the technical difficulties early in the production cycle and the anticipation of robust growth in F1Q after the strength observed in F4Q, we think the Blackwell ramp's pace is noteworthy, Stifel analyst Ruben Roy said in a note to investors late Wednesday. Roy upheld his 180 price objective and reaffirmed his buy recommendation for Nvidia stock. By overcoming a transformation hurdle early, Stein of Truist Securities observed, Nvidia's production achievement de-risks the future ramps of impending AI chips. In his own letter to investors late Wednesday, Raymond James analyst Srini Pajuri highlighted that Blackwell was very strong, while Citi analyst Atif Malik stated that the $11 billion in Blackwell sales beyond his projections. Malik and Pajuri kept their buy recommendations for the stock. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
So it could go down for a lot of reasons. Do you think the tariff news that we're attributing to some of the weakness yesterday, is that legitimate or an excuse?
Tariffs are an excuse and a concern, but right now it's unclear what those tariffs will be, and the specifics are lacking. Hence the uncertainty. Uncertainty leads to probably some people getting out of the stock. But until that's settled, the uncertainty will continue. But I'm also convinced that this administration has the best economic interest of our companies in mind. So I don't think in the long term that will have an impact.
And DeepSeek, now we're hearing that it was a headline, but it said DeepSeek is actually a positive for NVIDIA. Is that
both Colette Kress, the CFO of NVIDIA, and Jensen addressed this, and I happen to agree. There are multiple scaling laws in data centers in how you make everything more efficient. You can make compute more efficient, meaning the hardware, or you can make the software more efficient, meaning, like what DeepSeek did, or you can do both. And this is a case of both happening at the same time, and it's amazing. I happen to, be my background is in software, and my job at NVIDIA in those 10 years was to make the software more efficient. We had to ship new software every 4 to 6 weeks, make it 1% better, 2% better, sometimes 10% better. That accumulates over time, and by the end of the year, it's 50 or 100% better. DeepSeek came out with something that was significantly better, and that's nothing but good news. We need more compute to now run more workloads that are now cheaper on an individual basis.
In a letter sent early Thursday, Malik stated, "We believe that demand for NVIDIA's Blackwell will continue to run well above supply." Pajuri went on to say that China's share of NVIDIA's sales fell by 14%, which should ease worries about export restrictions. When Bloomberg reported in January that the Trump administration was considering tightening regulations on NVIDIA's processors for China, the company's shares fell. With Thursday's decline, NVIDIA's stock has dropped almost 14% in the last 5 trading days. NVIDIA's market capitalization fell below $3 trillion as a result of the stock's drop, below both Apple and Microsoft. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.